This is the lecture on Introduction to Business. We started with explaining business process and basic business concepts. First, we explain inputs into business process, which are property, plant and equipment, raw materials, labor and services, and outputs of the business process, which can be either products or services. After that, we continue with explaining the stages of converting inputs into outputs. This serves us as a basis for explaining how business process is reflected within financial statements. After that, we get some insights into performance from financial statements perspective. We do an exercise in which we explain the difference between cash flow and income flow. We also discuss some issues related to income taxation. On the basis of this exercise, we come to the conclusion that when doing business, it is very important to know what we produce and to whom we sell. Otherwise, companies might find themselves in serious liquidity problems. We continue with cost classifications. We explain that costs can be classified according to different criteria, and we also explain that each classification serves a different purpose. First, we start by costs according to their primary types, which are costs of property, plant and equipment, costs of material, labor costs and costs of services. Within this, we also discuss a little bit more the depreciation and amortization and explain why it is important within the business process to depreciate and amortize fixed assets. After that, we continue with costs according to their behavior pattern. From that perspective, we differ between fixed and variable costs. This classification is very important for cost volume profit analysis. We continue with classification, which is important for costing. We differ between direct and indirect costs on the basis of the possibility of their direct tracing to cost objects. After that, we also explain that costs can become expenses in the period when they appear or later because they might be left in the inventories of finished goods. And finally, we discussed some different cost concepts which are interrelated and very important for managerial decision making. We continue with cost volume profit analysis and the break-even point. Break-even point is a central point of the CVP analysis. We explain why it is important to calculate the break-even point and how we do it in real life. For this reason, we explain which are the assumptions of doing CVP analysis and which are the possible obstacles to do this in practice. Finally, we explain how we calculate the break-even point in reality in the situation of multi-product manufacturing company. After that, we move to cost concepts which are important for managerial decision making. We specially explain the opportunity costs and we discussed which are relevant costs for managerial decision making and also do an exercise focusing on using these concepts in the practice, and we explain this on the case of how to use different cost concepts in the decision whether to stop producing a product which brings loss to the company. Finally, we move to performance evaluation and we discuss the traditional financial performance measures, and within this we explain why it is not appropriate to use only financial measures for performance evaluation. we explain which are some contemporary tools for performance evaluation, and we specially discussed the balance scorecard. This was the brief explanation of the contents of the lecture on business and introduction to business.